Welcome to the deep dive, where we cut through the noise to get to what really matters. What a week in crypto. We've seen traditional finance taking a huge leap with tokenized assets, but then also some pretty serious security scares, some big identity plays, and wow, massive corporate funds flowing in. Really a mix of breakthrough and breakdown.
It absolutely has. And the intriguing thing is how these stories, Nasdaq, the MTM attack, Worldcoin, HashKey, they seem separate, but they actually connect. They reveal these key trends about crypto's vulnerabilities, sure, but also its maturation and its undeniable march into mainstream finance.
Yeah.
And despite all the drama, the overall crypto market cap holding pretty strong around $3.88 trillion. So Alana's up about 3.8%, and the DeFi index surged, what, 9.4%?
Yep.
Pretty remarkable.
Okay, let's unpack this then. Starting with traditional finance taking that, well, giant leap you mentioned. Nasdaq submitted a formal rule change to the SEC this week, the goal, allowing tokenized versions of stocks and ETFs to trade directly on its main exchange. This isn't just some pilot program, right? This proposal, if it gets approved, feels like the first serious attempt to really integrate blockchain securities into the core of the U.S. financial system.
It's monumental, really. These tokenized shares, they'd be fully fungible, completely interchangeable with the traditional ones. We're talking same ticker, same CUSIP, that standard ID number, all the same legal rights.
Okay.
And the trades would use Nasdaq's existing systems. So no changes to matching, clearing, reporting, none of that. The only difference is how the asset's represented on the ledger.
So it sounds pretty seamless on the trading side.
Exactly. And crucially, this isn't a sandbox. It's a proposal for a full rollout, possibly targeting late 2026. It creates a genuinely compliant path for tokenization at scale, working within the frameworks we already have.
So if it's using existing systems, are there any real technical roadblocks here, or is it mainly about getting that regulatory green light? What's the biggest risk, maybe beyond just the SEC saying yes?
That's a good question. Beyond the regulatory navigation, which is obviously key, I think the main challenge is just the sheer inertia of traditional finance. While the tech might be ready, getting large-scale adoption, that means changing habits, changing infrastructure that's deeply entrenched on the institutional side. So it's a technical block, more about coordinating this huge ecosystem.
Right, overcoming that inertia makes sense. Yet, as we're talking about this mainstream introduction, this exciting step forward, a much darker story unfolded this week too. A stark reminder of crypto's Achilles heel security. I mean, the NPM supply chain attacks on September 7th. Silent wallet hijacking.
Yeah, indeed. And this wasn't just a simple hack. It points to a structural flaw, really. It shows how fragile our digital infrastructure can be.
Right.
Compromised maintainer managed to inject malicious code into incredibly widely used NPM packages. Think Chalk, Debug.
Oh man, those are everywhere.
Exactly. Download billions of times a week. Embedded in crypto dashboards, DeFi front ends, you name it. So this injected code, it targeted the browser environment. When someone copied a wallet address, it silently replaced it with the attacker's address.
Ooh.
Ledger's CTO called it one of the most serious attacks they'd seen. It just highlights how Web3's decentralization promise is, well, only as strong as its most centralized points of failure, like these package managers.
That is genuinely terrifying. Given how common those packages are, is there even a practical defense for an average user? Or does this type of attack really expose a systemic issue that needs a top-down fix?
For the average user, it's incredibly hard to spot this kind of thing. It really does point to a systemic flaw. It means developers, open source maintainers, they need much more rigorous security, multi-factor authentication, tighter code reviews, things like that. But maybe also the ecosystem needs better ways to sort of attest to package integrity in a decentralized way. It's a big challenge.
Okay, let's pivot a bit. A different kind of story. Massive acquisition and identity. Worldcoin. A $270 million acquisition by Eightco Holdings. It triggered this huge rally WLD token up nearly 50% in just 48 hours. And Eightco's own stock briefly surged, 3,000%? Just wild.
Yeah, that was pretty sad. But what's really fascinating is the strategy here. Eightco is rebranding to Orbs and making a complete pivot to biometric identity. And they're establishing WLD, the Worldcoin token, as their main treasury reserve.
Interesting.
It really points to this growing need for authentication in the AI era, right?
Wow.
How do you prove you're human online? Worldcoin's iris code. That unique ID you get after an eye scan offers one way to do that. Verifiably distinguish humans from bots. They already have, 16 million users? And an ambitious target, 100 million by 2026. Plus, getting Wedbush analyst Dan Ives as chairman adds serious credibility. Though, there's still that ongoing regulatory scrutiny about collecting biometric data. That hasn't gone away.
Right, the privacy concerns are still there.
Yeah.
Okay, and speaking of institutional shifts, this next one feels really significant for the corporate world. HashKey in Hong Kong launched a $500 million digital asset treasury fund.
Yeah, this is a big deal. HashKey is Hong Kong's largest licensed crypto exchange. And this fund, it's focused on allocating long-term capital into Bitcoin and Ethereum, with a huge emphasis on institutional-grade custody and compliance.
So like MicroStrategy, but broader.
Sort of, yeah. It echoes that model of holding crypto on corporate balance sheets, but perhaps with a broader mandate. It really positions Hong Kong as this regulated hub for crypto capital formation. It offers the kind of template, especially for Asian companies, on how to responsibly integrate digital assets onto their balance sheets. This isn't just money flowing in. It's like a blueprint emerging.
Okay, so we're seeing institutions get serious, traditional finance adapting. But let's not forget the pure crypto innovation. Our token of the week is Pendle. Really interesting protocol, lets you tokenize and trade future yield. It's TVL, total value locked just past $400 million. Feels like it signals something growing in DeFi.
Exactly. Pendle really highlights the growing sophistication within DeFi, particularly around fixed income concepts. Yeah. It's a prime example of DeFi creating these new financial building blocks, right? Offering flexibility and ways to manage risk for yield-bearing assets that traditional finance is only just starting to think about tokenizing. You're basically getting tools to speculate on or hedge against interest rate moves within crypto itself. Pretty neat.
So wrapping this all up, what does this mean for you listening? We've covered the institutional embrace, cutting-edge DeFi, but also these critical security vulnerabilities, all in just 1 week.
Yeah, it really raises an important question, doesn't it? As crypto pushes further into our daily financial lives, and as we enter this AI era, are we actually building secure enough foundations? Or are we just accelerating both the massive opportunity and the massive risk at an unprecedented pace? Definitely something to mull over as this whole space continues to evolve so rapidly.